It's Trading Tip Tuesday for Brave New Coin. I wanted to talk a little bit about something I've talked about in many different ways before, but how and when to gracefully buy the dip. I think I can break it down as far as what I do in 3, maybe even 2 easy steps. The first thing, number 1, are we trending? Are we trending? Are we ranging? Or are we doing some mixture of either of those things? If we are trending, now this is dependent and subjective on what you're using, but I prefer the 200-day moving average, the litmus test, the industry standard that's been used for generations since technical analysis was born. If we're above the 200, we're bullish. If we're below, we're bearish. It's that simple. I never really deviate from that. If we're in between, above and below, then it's unclear, and that's not a dip buying opportunity or something I look to buy the dip on. Something else I watch for, is there a history of the coin having a trend? So, this is the opposite of BTC USD. This is Doge BTC. This is one of the greatest examples in the history of examples of a range bound chart. It was between 80 and 100 sats and 16 to 20 sats for years. And you can see this fractal even on the Shiba chart on lower time frames. So what most people generally would do in this situation is trade the range. They don't trade the trend because there is no trend. They trade the range. Buy the low, sell the highs, right? So the dip buying you're doing here is much different than trend trading dip buying. The dip buying here is just the range. You're not going beyond that. You're not buying dips that are closer to the top. I'm only pointing this out because this is the opposite of what you want to look for. I just think it's important to know. A lot of people like to say they're buying the dip every time anything's down 5%. But the reality is you need to see, is there an established trend for the coin or the pair that you're looking at? That's step 1. Is there a history of, part 1A, is there a history of prolonged trend, bullish or bearish? If we look at BAT BTC, just some random chart, this has a history of range bound volatility, downtrending, mix, right? This is not something I'm excited to buy the dip for if I'm bullish, because where's the barometer here? What are we measuring it against? This has been down only, and now it's been a random walk-ish some of the time, but it has been down only since inception. It has never made higher highs for multiple months, for multiple local highs. It's done none of that, right? So if I'm buying charts that look like this, I'm assuming I'm going to lose money for a prolonged period of time. And that's fine, but you got to have that as part of your trading plan. If your thesis is BAT is part of the metaverse, BAT is eventually going to take over because the browser is amazing, whatever it is, okay? As long as that's part of your plan, it's part of your plan. And I'll get to some other alts at the very end, but Tezos too. Tezos is a bit of a different one because it's got an uptrending over time feel to it, but it doesn't have a long history of being above or below the 200. It's just kind of in between, So to me, it's harder to buy these dips because if I'm buying these dips, I feel the same way I feel about buying the BAT BTC dips. I don't know how long I'm going to be underwater, and that changes my risk profile. It changes my leverage profile. That changes my size. You're much less confident in buying charts that look like this on a dip because the backtesting is poor. You can pick anything you want, pick moon cycles, I don't care. My guess is backtesting for something like this is going to be very noisy on where to buy the dip. Part of the reason why this BTC chart has been so successful is because some of the things you can see on backtesting, past results don't predict the future, but some of the things you can see are so obvious to anybody who knows what to look for, that when certain events occur, for most people, they say, yeah, okay, there's not a doubt in their mind, right? And it's important to get to that stage, not so you're in line with the hive mind, but it just helps to know where other people are at. So if we go to BTC, since 2012 on the daily chart, the 200-day moving average, right? We're still trying to figure out, are we bullish? Are we bearish? Should we be buying dips? Should we be selling rips? Should we be shorting, longing, all that stuff? The first step is always, what does it say on backtesting? Is there anything I can even look at? The reason technical analysis works in any degree whatsoever is because on backtesting, this looks really, really good. It's above, it's bullish. It's below, it's bearish. Sometimes it's messy, sometimes it isn't, but that's all part of the game. And here, if I'm looking at, if let's say today is the beginning of a multi-day downtrend, multi-day, not multi-week, just multi-day, even though it's still all low volume and for me, anything, and still anything can happen, until we eventually mean revert tomorrow for up 10%, I'd say, okay, cool, right? There's just no volume even on this down candle. Where I'd feel as safe as buying the dip would be at the 200-day moving average, because historically, if we're bullish, we're above that. We've bounced on the 200-day moving average several times since 2012 and just kept on trucking, right? We did it a couple of weeks ago, just kept on going. When you know when you're in trouble, when we are below the 200-day moving average, obviously this can go against you. If you have bids at the 200-day and it goes below, then what do you do, right? That's why it's important to have stop losses. In this case, I would just have a stop loss at the next lower low if my dip buy was at 49. Yeah, but this is why you have to sort of map this out ahead of time, because 49 is still 10K away from here. 49.4 is 10K away plus from here at the current price. So as quietly ugly as it got today, you'd want it to get even uglier for me to be super comfortable. There's this saying, you want to be buying when there's blood in the street. And that would probably satisfy, for most people, I think, blood in the street. Just everybody's underwater recently anyway. Something else I can use, or I like using because I'm backtesting, it looks good. And I'll do this for ETH and I'll do this for SOL, but is the weekly 20 SMA. If I'm looking for comfortable dip buying opportunities, historically, this is a great level. It was a great level in 2016, 2017, 2018. It was a great level to sell in the bear market, 2018, 2017, 2014. Great place to buy in 2020. The trend is your friend until the end. So obviously if it breaks through this level, then your dip buy looks like a poor place to buy. But if we are bullish, which we are, you have to assume this thing's going to bounce. You have to. Yeah, or you have to get comfortable assuming that it's going to bounce. So where do you put your bids? That's what we're talking about. So we have this number at the 20 SMA at 51. We have the 200-day at 49. So for me, the most comfortable bids are all the way down there still, even as we sit here today. The weekly cloud is at 40, okay? Now that is much, much lower and unlikely that we reach that level, but that's something else to watch for. What does this look like on the weekly cloud? On the daily cloud, 54 is the level on the Kijun, but in 2016, 2017, we tapped that weekly level several times, 4 times, 5 times if you count 2016. If you count even before that, in 2016, early 2016. So these are just intense mean reversions that happen over and over and over and over again, and yet we keep going. I think the difference here was we had established momentum, whereas here on higher time frames, most recently, we're still trying to establish that momentum. And you could argue we're coming off the early year momentum, end of year momentum. But over the past couple of weeks, we've been momentumless. So I think this is almost too passive of a dip buy when we're largely momentumless. Now looking at the weekly cloud, it's telling you these TK lines are flat really since the beginning of the year, and we're just ranging, right? So you could apply the same analysis for anything on any time frame, really. I prefer higher time frames because I like less noise to signal. The lower you go, the more noise you get. But if you're doing nothing at all, if you're just guessing, right? Pick, you got to pick something, right? Pick something, look up the back testing, see what it looks like. Does it look good? Does it make sense? Does it look like voodoo and magically work out, right? Like, I don't care if it is what it is, We can look at ETH, the same thing. Here's the 200-day moving average. We've been largely above the 200-day moving average since early 2020. We only briefly dropped below it in May. We bounced in September. So if we were to bounce again at 32 would be the level, that would be the most comfortable dip buying opportunity on a full mean reversion. The other part of these mean reversions is you get people screaming or feeling like they should be shorting more, they should be adding to their short, they should be selling, everything looks bearish, everything's going to die. When you get those people on the majority, that's typically when you get your bounce. So that's also part of the equation. You can look at funding, OI, you can look at all that stuff. But that's usually how this works out. And this has been bullish for a long time. And that's not even a cautious bullish. It's really just quietly hugged this 200-day moving average since the May reset particularly. So this doesn't look egregiously overbought still. How does it look on the 20 SMA? 20 SMA on the weekly has largely been a trend determiner for bullish or bearishness. And we've mainly held above that again since early 2020. That's also a 34 level, 3,400 currently. You can see we bounced a couple of weeks ago. So again, pick something high on backtesting. Don't care what it is. Don't care the indicator. Does it tell you anything historically? Has it worked out? That's step one. Does it work out as a dip buy? I think it's pretty strong as a dip buy. So ETH, the safest bids are 32 to 34. There's a range for you. And if we look at the weekly cloud, the most passive bids you could put right now are at 27 with a stop loss at whatever the lower low is at 17. I don't think we get that low. I think we're going to struggle to get much lower, which is part of the reason why I didn't reduce my own position sizes. Part of the art of buying the dip is knowing when it's coming and knowing what to expect. So sure, we can go dumpster diving much lower across the board. Though we're really going to need a volume ramp to figure that out. Here's Solana on the daily cloud again. Bids on the Kijun is typically what I say. The Kijun is this red line. You can see how this has worked out on backtesting occasionally. Currently that level's at 194, not too much lower than 220. This is the daily. You can't really look at Solana or some of these newer coins on higher time frames, like the weekly. I also like to watch RSI. I didn't mention it on the BTC chart, but if you're trending bullish, you're going to be above 50 on the RSI usually. On the weekly, I mean, again, historically, what does it tell you? When were we bearish? When were we below the 50 or below 50, above 50, whatever? Currently for Solana, it is a bit noisier on backtesting, but we're still above the 50. So I think trend-wise, it's undeniably bullish still. If bullish, where buy dip? Buy dip at mean. How do we find mean? Kijun or 200-day moving average. And here's the 200-day moving average for Solana. Do I think it gets down to 120? I don't think it'll happen, but it doesn't mean you can't put bids down there. You know, even if you buy the dip at 194, you could buy again at 120 and still be okay. That's what this is suggesting. Not a lot of data here. Dangerous to do. High risk. You know, maybe you want to add or set like 10% of your total allocation on your dip buy at 194, and then just let that puppy go. If it goes up, great. If it doesn't, 120 is in the next place you step in based on the 200-day moving average. Previously, it triple bottomed on the 200-day moving average and then proceeded to 10x from there. Is it going to do that again? Probably not, but it's just illustrating, yeah, it did recognize that as a level for whatever reason and had a pretty good time after that. Here's another chart. Just a lot of people, I'm sure, looking at, thinking about as far as, should I be buying here? I got some airdrops. Should I be selling? This is an investment advice. I'm just pointing out math basically, but this is ENS. And again, you pick the time frame, pick the indicator. This is the 15-minute, 200-day or 200 period moving average. So historically, this thing has not been able to hold any highs whatsoever. It's continually just bled lower, lower, lower. The rule with any airdrop for me personally, if I need the money, I sell it immediately. I don't look back. If I don't need the money, I hold it. And if I think it's going to go somewhere, I just let it do its thing. You know, look at 1 inch, look at a lot of the other airdrops that have happened over the past 2 years. I don't think it's worth, even though this is what most people who are paying attention to airdrops do, I don't think it's worth losing sleep over, do I sell it today? Do I sell it tomorrow? What do I do? What is crypto Twitter saying? This is undeniably bearish. I expect this to go lower. Am I going to buy some? No. Am I going to sell my airdrop? No, it was given to me. Okay. Like, I'll sell it when I think the time is right. I don't need the money right now. It's fine. But this isn't something you want to buy the dip on because, again, historically, in the couple days worth of data here, this thing has not held any bullishness whatsoever. And then if we look at FODL, which is another one a lot of people are talking about, finance, historically, this thing has not been bullish ever. Again, the protocol might be amazing. I might love the protocol, but the token has never been bullish, and it's at all-time lows, at least on OKEx, which is where I'm pulling this data from. It's at all-time lows. Do you buy the dip? Would I buy the dip on this? I would not. I would let it do its thing. You know, it's never been bullish, right? Why do you have to be the hero? I mean, you can be the hero. I'm not going to be the hero. You can be the hero all you want. So hopefully this was semi-helpful. Are we ranging? Are we trending? Does it have a history of ranging or trending? Trending, that's what you got to figure out. And then you got to figure out on back testing what looks good to you personally. I just talk about what looks good to me, but that might look terrible to you. Then I like to use one or two indicators and get a range confluence for a mean reversion target, and then go from there. Don't think about it. Don't look back. Lastly, let me just mention the ETH BTC fund and DeFi portfolio. I trade for Technique Capital and Enzyme Finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM, performance, allocation, some vaults that I'm in here on your comp and Aave on occasion, as well as the trades in the trades tab down below. that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.